The central banks have been buying gold and silver for 10 years. The reason why they've been suppressing is they're trying to shake you out of your stack so we can go into their stack.
Okay, friends, thank you so very much for tuning in. It's Sean from SGT Report. Thanks so very much, guys. I really appreciate all your support, and a very happy Thanksgiving to all of you. Boy, we've got a lot to be thankful for, and it's my hope that we won't see any sort of economic tsunami anytime soon because, boy, you know what, Bob? I don't wish that on anyone. Guys, Bob Kudla, the founder of Trade Genius, is back to talk about all things economic. How are you, Bob?
I'm doing good, Sean. How you doing?
I'm doing well too. You know, I am increasingly worried though by what I see the Fed doing, and we're going to talk about that in a minute. But you have some news. We're recording this today, the day before Thanksgiving, and you told me that at the close, right before the close of the market, there was a huge gold bet made by a big trader. Tell us about that.
Yeah. So just an hour before the market closed, it was just reported on Bloomberg, big enough for them to put an article out that a major trader put down options to buy gold at $4,000 by June of 2021, which is a tremendous bet with gold here just hovering right below 1,500. And it was a multi-million-dollar bet. So this person is thinking something's going to happen in what they call a violent move higher. He may not stay in all the way to 4,000, but if he gets a violent move higher, he's going to profit tremendously. So somebody's looking for something big. And as you know, we don't really know who these traders ever really are, Sean. So it could be somebody, a sovereign even, in the know and preparing to profit from some sort of event. So I think it's important for your listeners to know, gold and silver have been on the edge here of its big move, and they can't sell it off anymore. And this was really interesting. They snuck it in on a quiet Wednesday trading before Thanksgiving. Hopefully not too many people would notice, but people noticed it.
Well, we wouldn't be surprised to see gold at 4,000 or much higher, actually. But one of the things preventing that from happening is all of the paper manipulation that's been going on for so long. At some point, that's not going to work, though, because nobody wants to hold fiat overnight. Look at the repo market. I mean, these banks don't trust each other. The Fed is jumping in. You sent me an article that I really ought to share here. You better believe the Fed is doing quantitative easing, and here are the beneficiaries. Do you want to talk a little bit about what the Fed is up to? Because I'm really afraid we're going to see another electronic run on the banks like we saw in 2008 on September 11th, which Representative Paul Konjarsky told us about. I can play that soundbite in a minute, but your thoughts on the repo market, the Fed. This is just a house of cards that appears to be coming down at this point.
Yeah, I mean, the banks are stuffing themselves with cash. And so there's a rumor going around that a bank outside the United States is in trouble. And, we weren't sure if it was HSBC or if it was Deutsche Bank. Well, the rumor now is it's a big Japanese bank that's in trouble. And so that is something that is of interest. And JP Morgan all but said, hey, we're not lending anymore. And we're pulling in our horns and we're stuffing our balance sheet with cash. And JP Morgan already owns 54 million ounces of silver. So somebody is preparing for something that's not going to be pleasant. And as you know, Sean, as they take interest rates down to zero, the banks are essentially unprofitable. And they're living totally on the gift from the Federal Reserve, that gift that comes from you and me, because that money doesn't come back to our treasury. That money goes from the central bank to the bankers versus the central bank back into our treasury. And the banks won't be profitable without total handholding from the Federal Reserve. So people are expecting interest rates to fall. Somebody's expecting a run on the currency where they wouldn't be betting on a $4,000 gold price. And so silver and gold, they haven't gone down, and they've been trying like mad to get silver and gold down, gold below 1450, silver below 15. But it keeps bubbling back up. And that's telling me that the confidence in currencies, just like the confidence in banks, are eroding rapidly.
Well, let me just play this soundbite for you and for the listeners, Bob. I played this in my recent interview with Lynette Zhang, but it bears repeating. on September 11th, 2008. Think about that. September 11th, how symbolic. Here's what happened, according to Representative Paul Konjorski. I'm afraid it could certainly happen again, and the Fed isn't going to tell us about it. They're just going to try to paper over it. But this is how bad things could get.
On Thursday at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks.
I'll pause it there. He goes on to say that if they hadn't closed the window by 2 p.m, he estimates it would have been 7 or 8 trillion taken out of the economy of the United States. It would have crashed the U.S. economy, and it would have crashed the global economy within 24 hours. So that's what we're dealing with here, Bob. That's what we're dealing with here. I just want people to understand how serious all of this stuff is, and all the Fed can do is try to paper over it.
Yeah, I mean, look, we're dealing with a world of derivatives. It's, what we see above sea level is nothing compared to the iceberg of the derivatives underneath the water. And the thing that really is sad is that we have no visibility as to whom are the beneficiaries and who are the bad actors, because the central banks around the world have all that information cordoned off. And, as far as we know, we could be doing some side deals with China under the surface, right? We don't know. They make these bets all the time, and we never really know what happens. We just know that all of a sudden the bank's in big trouble. But all we need to know, Sean, is that, look, they're pumping 60 to 70 billion dollars a month of fresh capital in. And Jim Grant thinks that they've already exceeded $1 trillion. We don't know that yet. You know what I mean? They because they don't have to share with us information. He thinks it's far higher in the shadow banking world, that the amount of cash that's being poured in. And China is an absolute train wreck. They're already at 350% of GDP on their books. That dwarfs America. That's like America having a $60 trillion balance sheet, Sean. That's what China's looking like. And there's no way they're ever going to pay it back. And when that implodes, nobody's going to be able to avoid it, because the reverb will make the Lehman Brothers collapse look like nothing.
Well, when we talk about bets and we talk about the stock market, we should talk about Trade Genius here in a second. I'm going to give you a chance to plug that. But let's just look at this Deutsche Bank chart. This article comes from Wall Street on Parade. Intraday bankruptcy. A 2008 email from the Fed provides insight into today's overnight repo scare. I just want people to look at that Deutsche Bank chart. Just take that in. That is a dead bank walking. A dead bank walking with, I think, over $50 trillion in derivatives. Is that right, Bob? What happens to a dead bank walking with $50 trillion in derivatives? I can assure you, folks, it's not good. Whatever's coming is not good.
It'll bankrupt Germany.
Now, you heard it was a Japanese bank. Did you happen to hear what bank that was, or they're not saying?
I saw it in passing, and it was a name I didn't recognize, but they said it's one of the larger top 5, top 6 banks in Japan. But, it doesn't have to be one bank. It's also, JP Morgan's taking that repo money too. And, money's moving out of Hong Kong into Singapore. So, they have their hands out, and Deutsche Bank for sure. All these banks are primary brokers. So they're allowed, because they have to buy treasuries, they're allowed to tap into the Fed. And a lot of these guys are getting that Fed money and turning it right into cash. And so, when they have a run on their depositors, they simply will not have enough money, even what the Fed is giving them. They won't have enough cash on hand. I was explaining that to people in the room today, is that when you look at a dollar, there's kind of $2. There's the credit dollar and there's the cash dollar. And when people start defaulting on their loans and they start paying off their loans, or they start hoarding dollars, those are what we call cash dollars. And then the credit dollars are collapsing, and then people want more of the dollars they can pull out and physically hold, and they're not available. And so I think the Fed is right now trying to provide as much of that that money on hand that people can convert into currency as they pull money out of the banks. But it won't be enough. We're like at a, in Germany and in Europe, they're at 40-1, Sean. There's simply no way they could produce enough currency. In the United States, we're like at 9-1. I have no idea how bad it is over in China, 30-1, 40-1. The banks simply won't have enough money. They'll just simply close their doors, and people will be out of cash. They'll turn the ATM machines off. And, I think that's why China is trying to quickly go to a digital currency so that they can lock everybody into their torture chamber of the CCP utopia.
Crazy times and getting crazier by the day. Here's an article on Zero Hedge. Deutsche Bank sells $50 billion debt portfolio to Goldman in bad bank wind down. I mean, whatever's going on behind the scenes is just, I think, unimaginably bad. And you say it's a Japanese bank, perhaps, that's the most in trouble. Look at Deutsche Bank. I don't know what bank could be in more trouble than Deutsche Bank. Look at that stock price, guys. It is a dead bank walking. And I think what's scary about the Japanese bank scenario is the fact that Japan is really the buyer of last resort of U.S. treasuries. And when that doesn't work, the Fed steps in. I think in that article you sent me, it said the Fed is buying $60 billion in treasuries per month. So
Yeah.
That's what's propping up our economy, is we're buying our own debt.
Yeah, well, we're monetizing, and I think that's why, last time we did QE, Sean, it's important to know is because that's why they tried to push gold down. They said when the Fed does QE, it lifts the animal spirit. You saw the stock market trying to push higher here, but it also suppresses the risk off assets. But this time it didn't do it. And so I think people are saying, hey, we're at the monetization stage now of this whole debacle called fractional lending and central banks. And that's when you're going to really see the liftoff in gold and silver. And that's why I've just been begging people, you need to be exposed. You need to have gold, silver. I like the miners because they're my gateway into the stock market. And if gold triples like this guy Bet thinks, you're going to see miners go up 12x. So if gold doubles, you're going to see miners go up 8x. And they're extremely undervalued. That's why I'm always in there trading them. Always have some exposure, always have some lottos sitting in there, because it's going to be one of those days, Sean, we're going to wake up and we're going to wonder why gold is at $2,500. I mean, literally, it's going to be an overnight event. They never let retail in. So when this happens, it's going to happen when the most people can't trade it. And then boom, it'll be too late for most people. So, you need to have exposure. And that's been what I've been preaching ever since I started Trade Genius, is that the stock market with, the FANG stocks and all that stuff, look, they're going to get hammered. But the stocks that have commodities behind them, they're going to do okay. And last week, Sean, copper stocks, silver stocks, natural gas stocks, oil stocks, all went up. All went up. So somebody is sniffing out, we need to start putting our cash into assets that are backed by hard assets, stuff in the ground, stuff you can touch. And gold and silver is simply just going to explode once this stock market charade, kind of comes to an end.
Yeah. Well, as I covered with Lynette Zhang, I showed that Amazon stock price chart, stock at $1,700 some dollars, a PE ratio of 77 or something. It would take 77 years of earnings to equal the share price of Amazon. I mean, it's just lunacy. All right. Well, speaking of the stock market, do you want to take a second just to plug Trade Genius? Because you did send me some visuals, which I'll put up on the screen. You guys are having a 65% win ratio on the stocks you're recommending, with an average gain of 7%, 7.1%. And according to this data, that's a 370% annualized return. Is that accurate?
Yeah, it is. I mean, there's a little bit of overlap there. The important thing is to see the trades that we do and that we win at an elite level. 2 out of 3 of our trades are winners. And that's 7% net. That's net of losses. So that's net of everything that we do. So yeah, we do quite well. I tell people, take that number divided by 3, because you can't be totally invested. And, you're still looking at triple digit gains with us. So yeah, we're proud of what we do. Our algorithm works. It's buy low, sell high, but we're looking at the buying momentum. We're looking at the selling momentum, and we're just trading that move in and out. consistently. We're short swing traders, so we're typically in a trade for about a week, and we just constantly look for new trades. And when the gold and silver miners are resting, we're in the other commodities, and when they're resting, silver and gold miners pick back up again. So we just been yinging and yanging back and forth. And what we do for our subscribers is that we provide those trade signals out electronically real time. At the same time, we have a chat room for stocks and a chat room for trading cryptocurrencies and Forex. And then in addition to that is that we have those software indicators that we use personally that people can have access to, and they can actually unearth, buy and sell opportunities that we may not be following. And what we try to do is, we offer bundles, Sean, depending on your level of experience and what you want to trade. And we put 6 of them together. We extremely discounted them for Black Friday. And we also provide, if you want to buy things individually, you can use the Black Friday promo code. And I also sent you a bunch of testimonials too. And that's just in the past week, just so you can see what we do for people and how we help change their lives.
Yeah, I saw those. What is the Black Friday discount code or the promo code for Black Friday?
Yeah, it's really creative. It's called Black Friday, and it'll go to Saturday, Sean. So right. Black Friday is, we're going to run it to Saturday at midnight.
All right. Well, let me ask you something. I do get the alerts on my phone, and I've been awfully frustrated with Bitcoin. Now, it's my firm belief, and I think Bixweir would back me up on this, that it is the futures market for Bitcoin which has destroyed Bitcoin. They are using the futures market to short it because it's absolutely absurd. There's so few actual Bitcoin out there. There's no way they can be stomping down on the price as much as they do without the futures market. But let me do a screen share here. Before anybody deems Bitcoin and Litecoin and the others to be dead, the BRICS nations discuss shared crypto to break away from USD and SWIFT. You might want to bet on the dying of the dollar before you bet on the dying of Bitcoin. But back to Bitcoin. What is going on with the cryptos in your view? Is it the futures market that is causing these slams? And the second question is, when you guys send out the alerts to short Bitcoin, which you have done, and you've made money doing that, how do you short Bitcoin? I don't even know how to short Bitcoin.
Yeah, so let me answer the first question first. So our view is that the futures market, I think, affected Bitcoin coming out of the 2017 top into that 2018, 2019 low. And now I think the issue is a lot of it is the turmoil in China, that people now, because 80% of the cryptocurrencies simply don't trade. They're just being held. And so,
and I want to just flush that out. You're right. That's my point. And Bixweir did a video the other day in which he said, I think 85 million Litecoin were traded in one day. How's that possible when the entire float is like 60 million and most of those are locked up?
Yeah, I mean, some of that stuff is pure fraud, and some of it is big whales just dumping out of China to get their money out of the country before China locks down the crypto market for their own digital coin. So, and then, we're going to have options coming up too in January, February. The CME is going to have Bitcoin options. So that's going to add another wrinkle in there.
And the halving's coming up, I think, in the spring, right? The next Bitcoin halving, and that's going to be a big event. I think that's going to drive the price up.
It will. But our view is, and I'll get to the shorting thing in a second, we bifurcated our thinking on Bitcoin. We have a thing we tell people, we're stacking for the future. So you hold what you hold, or you could be a trader. And so we send the signals out, and we just did 2 of them this last week. I shot you the notes, and you saw the alerts. That's nearly 15% gain, in quick succession here, catching that bottom that we saw. And so we look for those opportunities to sell it long. When we say sell it short, we tell our subscribers, if you're in the US, you really can't short Bitcoin. So that's the signal. We give a target. That target is where you probably want to enter in again. But we have a lot of traders around, because our subscribers are worldwide, and we have a lot of traders that are on BitMEX, and there's some other places that allow margin and that you can actually short Bitcoin. So, we view it as our responsibility, if we see a a high probability short for catching Bitcoin on a move down, we're gonna announce that to our subscribers so that they can make more money, and they can cover at a lower level and stack more Bitcoin. But from a macro perspective, is we're pro crypto, but as a trader's perspective, is we're pro making money. So we'll look for it that way. For people who can't short it, we say, hey, stay out until that target area is hit, and then we're looking for another buy. So that's how we do it, Sean.
All right. Well, what's your forecast
today too?
Pardon me?
We just put a short out today.
Yeah, I saw that. All right. Well, as we round out the conversation, I'm seeing here again on Zero Hedge. I think this came from Peter Schiff, actually, Schiff Gold. But Poland repatriates 100 tons of gold in symbol of strength. And they repatriated that gold from, I think, the Bank of England.
That's right.
So again, a run on the banks, this time for gold. These nation states want their gold back. Your forecast for silver and gold moving through the end of 2019 and into 2020, Bob?
Yeah, so our view has always been by next summer we would see silver north of 20, and we'll see gold north of 2,000, and then we'll have to see how the election goes. Depending on who wins and how that all the mechanics work out, then I think we'll be in a better place to look at 2021. But that's our view. We see this, any selling is buying opportunities, and we think the price is going to move much higher from here. And look, I'm not myopic. I'm not just saying that because I'm a gold bug. I'm just saying that because when you start putting a couple $1 trillion more into the system, is that it's going to start leaking out into places where people are going to hedge their bets. The dollar's been too strong for too long. And as the dollar rolls down, people are going to be flying into gold and silver to protect themselves.
Well, and we've been saying that forever. And those of us that have been stacking have not really been rewarded. Certainly with silver, we've been punished for trying to do the right thing. And isn't that just the way it's supposed to go, an upside down world, Bob? Honestly, meanwhile, European central banks are slowly preparing for plan B, gold. Sooner or later, this debt tsunami of fiat is going to come crashing down. The house of cards may be coming down. Look, we round out the conversation ending where we started. The Fed is trying to paper over it. They're trying to keep these banks solvent. And I think they might be losing the battle, and people are starting to see that.
Yeah, and look, you don't worry about what they tell you. Is what they're doing. The central banks have been buying gold and silver for 10 years. The reason why they've been suppressing is they're trying to shake you out of your stack so it can go into their stack, because they have a longer term time horizon than you. And then they're going to flip the switch. And that's why we like to trade, Sean, and not just stack, because we've been making money through this whole grind. And so, we can hop off and hop back on, where it's a little bit harder if you own physical gold and silver in your safe to run out to the coin dealer every time you think it got overbought. You have your stack, you put it away, kind of like you're hodling for crypto. And then you got your trading stack that you use in the stock market for the miners, and you hop on, hop off. I consistently sell options against, Wheaton Precious Metal and Barrick Gold. And, I'm collecting an income stream every week. They've gone nowhere in 2 years, but you essentially paid for the stock. And so those are the kind of things we help people understand, is that even if it doesn't move, you can make money. And then when it does move, you're going to make a lot of money. And so those are the tricks of the trade that you just have to sit there, that is sitting in your 401k or IRA, and you're frustrated because it's the same price it was 2 years ago. If you're trading it with us, you're going to make money during that time. And then when it starts to move, then you can just sit back and just watch the Benjis come in.
Yeah, the Benjis. Yeah, that's stack the Benjamins, huh? All right, and then exchange them for gold and silver. I like that. All right,
Exactly.
Last question. Let's just look at politics briefly before I let you go. Bloomberg has thrown his hat in the ring for the presidency, and it's just more nonsense to me. Like, do you honestly think the American people would prefer to have a billionaire liberal like Bloomberg as the president, as opposed to the president we currently have? Who would vote for that guy? And have you seen his spots? The spot he has running, there's a portion of it where he must have been giving a speech at a global climate change summit. So he's going to protect us by taking away all our forms of energy in the name of saving the planet from global warming. I mean, that's the best they have. Bloomberg.
I mean, he's not gonna get the Democratic nomination. Let's lay it out here. First of all, nobody in their right mind that's center or right of center or right is going to vote for him because he already promised to take away your guns. Number two is that he's a climate change nut. So any state that has any kind of energy resources are not going to vote for him. Number three, he's a New York elite. So that's going to wipe out half the country. And number four, and I'll just say it, is that the left is extremely anti-Semitic. And he's a proud Jewish guy, and he's very pro-Israel. And the left has gone rabidly anti-Semitic. And so I just don't see him having any kind of support from the radical delegates in the Democratic Party. So, I think he threw his hat in the ring, not because he's freaking out over Trump, I think he's freaking out over Elizabeth Warren and Bernie Sanders. And, he and Trump are more alike than they're not alike, except that Trump he knows where his bread's buttered, where Bloomberg thinks he's the cat's meow.
Yeah. Well, what I do like to see is these people burn down their own house. And the Democrats have burned down their own house with this impeachment farce. And they're taking it, right? They're really taking the brunt end of it now, too, that they're all on holiday and going back to their own districts. And they're hearing from Democrats saying this impeachment stuff is a distraction and it's ridiculous. Get back to work.
Yeah, the polls say that's a you problem, not a country problem to the Democrats. They're saying this is like a parlor thing. We have things you got to fix. You're not fixing them. I would love nothing better for them to try to impeach him and let all this stuff come out in the Senate. Finally, get it all out in the open.
Yeah, let's get Joe Biden and Hunter Biden on the stand. Let's talk about the real quid pro quo.
Yeah, and you know what? He just got caught doing a little meth action or coke action. I heard in a nightclub too. I mean, this kid can't stay out of trouble, and and you get him on the stand, and he's not eloquent at all. He's going to be Fifth Amendment the entire time, and but you and I, we understand this, so we're just preaching to each other here at the choir. Is that Trump set this whole thing up. Now he's saying, sure, I'd love to go to the Senate. I'd love for you to impeach me. Now he's playing with their head.
Well, they definitely are burning down their own house. Bob, thanks so much for coming on, and happy Thanksgiving.
Hey, Sean, thanks so much for having me, and you as well, and hopefully I'll catch you before Christmas.
Yeah, absolutely. I hope so too. And guys, thank you for tuning in. Happy Thanksgiving to all who are listening. Thanks so much for your support. I will put that link to Trade Genius below so you guys can take advantage of that Black Friday promo if you'd like. And I guess that's it. Thanks, Bob.
Thank you.
All right. For real news 24/7, you can visit us at sgtreport.com. God bless. Bye-bye.
We are hollowing out these companies. It's just about the rich individuals that are up at the top that get the benefits from this. And the rest of us, our lives aren't worth it.